I want you to imagine, just for a second, the absolute headache of trying to get a standard everyday mortgage.
Always a massive headache.
Right. You gather this literal mountain of paperwork, you submit it, and almost immediately, it feels like the bank is actively looking for reasons to reject your application.
Yeah, they really scrutinize everything.
Exactly. Like every missing signature, every slight irregularity, they treat it like an absolute red flag. But now I want you to take that frustration and multiply it by 10.
Oh, wow. Okay.
Yeah. What if you were self-employed? Or, what if you were living abroad as an expat? Or what if you were a foreign national looking to invest in property from an entirely different country?
Well, for a huge segment of the population in those exact situations, the traditional banking system doesn't just put up hurdles. I mean, it essentially bolts the door completely shut.
Which brings us to today. Welcome to today's deep dive. Our mission today is to explore this really fascinating lending philosophy called borderless mortgages.
It's a great topic.
It really is. So we've got a stack of information on this Miami-based independent mortgage brokerage called MortgageToday, and we are going to dig into their specific service offerings, their origin story, and a bunch of actual customer reviews to understand how they operate differently.
It serves as a really compelling case study, because their entire model challenges the standard operating procedure of the conventional real estate finance industry.
Yeah, it completely flips it on its head.
Yeah.
So here is our roadmap for the deep dive. First, we are going to figure out why traditional banks are so incredibly quick to reject non-traditional borrowers.
Right, the root of the problem.
Exactly. Then we'll dive deep into the mechanics of how a brokerage like MortgageToday actually finds a yes, using what they could call alternative underwriting.
Which is fascinating all on its own.
It is. And finally, we will explore how they manage to balance a 100% digital global application process with, highly personalized human support.
Because, as we'll see, having the right technology is really only half the equation when you are dealing with a process this complex.
So true. So to understand how MortgageToday is pulling this off, we really have to look at the friction they're trying to solve.
Right.
The company was founded back in 2022 by a broker named Kevin Rodriguez. They're based right on Brickell Avenue down in Miami, Florida.
Great location for international business, actually.
Oh, definitely. But this whole borderless mortgages philosophy, it actually came from the founder's own personal experience.
Yeah, the source materials detail how he spent years living and working abroad.
Right.
And during that time, he saw firsthand how nearly impossible it was for investors or expats or self-employed borrowers to navigate the traditional U.S. financial system.
It's like the infrastructure simply wasn't built to accommodate them at all.
No, not even a little bit.
I was actually trying to visualize this while reading through the sources, and the best analogy I could come up with is that the traditional U.S. banking system operates like a highly exclusive club guarded by a really outdated bouncer.
I like that, an outdated bouncer.
Yeah. Right. Like this bouncer only recognizes two forms of ID. You need a standard W-2 tax form, and you need an 800 U.S. credit score.
And if you don't have those exact two things,
You're out. I mean, you could walk up to the door running a massive, highly successful freelance business. You could have a thriving global rental portfolio.
you basically have the means to be a fantastic patron of this club.
Exactly. But because your paperwork looks just a little different, the bouncer crosses his arms and turns you away. So I have to ask you, why is the banking system so incredibly rigid when today's modern workforce is so fluid and global?
Well, the core issue driving all that rigidity is scale.
Scale.
Yeah. Big traditional banks process an astronomical volume of loans every single day. And to do that efficiently, they have to rely on highly standardized, rigid boxes.
So it's an assembly line.
It is entirely an automated assembly line. When an expat or a self-employed person enters that pipeline, they just don't fit neatly into the standard box. And the bank's automated systems, they're not designed to stop the entire assembly line, pull up a chair, and sit down with the applicant to figure out their unique financial narrative.
They don't have the time for that.
Exactly. The system just automatically defaults to a rejection. It's really a limitation of their infrastructure, rather than, active malice toward the borrower.
Okay, so if MortgageToday refuses to use the bank's outdated checklist, what tools are they actually using to measure risk? Because they still have to measure risk without being reckless, right?
Of course.
It's not like they're just using a slightly different box.
Yeah.
From what our sources show, they're building entirely different doors.
And their structure as an independent mortgage brokerage is what provides those doors.
How so?
Well, Unlike a single retail bank that only offers its own strictly regulated in-house loan products, Mortgage Today has access to over 40 wholesale lenders nationwide.
Oh, wow. Okay, so taking my club analogy a step further,
Yeah.
having access to 40-plus wholesale lenders is like having 40 different bouncers at 40 different doors.
Yeah, that's exactly it.
You drastically increase the odds that at least one of them is going to appreciate your specific financial vibe and just let you in.
Right. Because they aren't tied to one institution's strict risk profile, they can actively shop around for competitive pricing and flexible programs on behalf of the borrower.
That makes a lot of sense.
And the mechanism making this possible is called alternative underwriting. They specifically utilize non-QM or non-qualified mortgage lending solutions.
Okay, let's define that for the listener because a non-qualified mortgage sounds, on the surface, like a mortgage you really shouldn't be getting.
It does sound a bit ominous.
It does, but I'm assuming non-qualified just means it doesn't meet the highly specific, rigid criteria set by government-backed agencies like Fannie Mae or Freddie Mac.
That is the exact distinction. Yes,
Yeah.
a non-QM loan doesn't mean it's high risk. It just means the income or asset verification falls outside standard federal guidelines.
Got it.
For example, one of the really specialized products they offer is a bank statement loan.
And who is that for?
It's engineered specifically for self-employed individuals or business owners.
Okay, so how does that bypass the W-2 problem?
Well, instead of demanding a standard W-2, which a business owner might not generate in a way that reflects their true cash flow because of heavy tax deductions.
Oh, right, because they write off everything to lower their tax burden.
Exactly. So instead of looking at that minimized net income on a tax return, the lender evaluates months of actual bank statements to verify consistent income.
Oh, I see. So they're looking at the actual gross deposits coming in over, say, 12 or 24 months to establish a true baseline of what that person actually earns.
That is the mechanic, yeah. You are proving the cash flow exists.
Yeah.
You are simply proving it in the way the business actually operates day to day.
That's incredibly practical.
It really is. Now, another major pillar of their alternative underwriting is the DSCR loan.
DSCR, debt service coverage ratio.
Yes. And this is a vital tool for rental property financing.
I really want to spend a minute on this one because looking at the sources, it seems like an absolute game changer for investors. How does the math on a DSCR loan actually work in practice?
Let's run a quick hypothetical scenario.
Okay.
Normally, if you want to buy an investment property, a traditional bank looks really closely at your personal debt-to-income ratio.
Right, your personal finances.
Right. So if you already have a primary mortgage, a car loan, maybe some credit card debt, the bank might say you can't afford another mortgage, period.
Right.
Regardless of how lucrative the new rental property might be.
That's so frustrating for investors.
It is. But a DSCR loan removes your personal income from the equation entirely.
Wait, entirely? They don't look at your personal paycheck at all?
Not at all.
Wow.
Instead, they look at the income potential of the asset itself.
Wow.
So if you want to buy a duplex and the monthly mortgage payment, including taxes and insurance, is going to be $2,000.
Okay, 2,000.
The underwriter looks at the local rental market. If an appraiser determines that the duplex can conservatively generate $2,500 a month in rent, well, the property generates more than enough income to cover its own debt.
So the ratio is positive.
Exactly. The loan works based on the strength of the asset, not the buyer's personal W-2.
That is brilliant.
And they apply a very similar alternative asset-based logic to ELOADLs, home equity lines of credit and cash-out refinances, which allows property owners to leverage the equity they've already built up.
Okay, so that covers the self-employed and the investors. But I was looking at the customer reviews in our source stack, and there's this one from Natada 1832.
Oh, the ITN review.
Yes. She gave him a 5-star rating specifically for their ITN solutions, but she specifically mentioned, quote, no USA credit score or income needed.
Right.
I have to admit, on its face, that sounds incredibly risky. How is the lender not taking on a massive gamble there? Like, if they don't have a U.S. credit score, are they pulling banking records from their home country, or is it purely based on the asset?
Well, first, we really need to clarify what an ITIN actually is.
Good idea.
It stands for Individual Taxpayer Identification Number. The U.S. government issues these numbers to foreign nationals and others who have tax reporting requirements in the U.S., but they aren't eligible for a standard Social Security number.
So it basically allows them to pay taxes and participate in the economy.
Precisely.
Okay, so they are fully documented within the tax system. They just don't have the traditional SSN that domestic banks rely on to pull a standard FICO credit score.
Correct. And, when people hear no U.S. credit score required, they mistakenly assume it means no proof of financial responsibility required.
Which would be crazy.
Exactly. But alternative underwriting is not about ignoring risk. It is about measuring it differently.
Right.
Think about an international buyer. They might have immaculate credit, substantial wealth, and a long history of responsible borrowing in their home country. But because they've never taken out a credit card or a car loan within the borders of the United States,
They are technically invisible to U.S. credit bureaus.
yes, they have a zero score here.
It's like moving to a new country and being told you don't know how to drive just because you don't have a local license yet.
Oh, that's a great way to put it.
You are still an excellent driver. You just need an insurance company willing to look at your driving history from back home.
That analogy perfectly captures the dynamic. Traditional banks see that zero U.S. credit score and they just panic. Mortgage Today, through their wholesale network, evaluates the actual driving record.
Got it. So how do they mitigate the risk without the FICO score?
They might require a significantly larger down payment,
Sure, put more skin in the game.
right? Or they might use alternative credit verifications pulled directly from the buyer's home country. Or if the foreign national is buying an investment property, they just rely on that DSCR model we just explored, where the property's own revenue secures the loan.
It is a fundamental shift in thinking.
It really is. It goes from asking, does this person have the standard U.S. paperwork, to asking, does this underlying financial scenario make sound mathematical sense?
Okay, so the math works. But if we shift gears to the customer experience side of this, I noticed a really fascinating tension in their materials.
What kind of tension?
Well, we've established that Mortgage Today handles these complex, highly customized loan options. But honestly, none of that matters if the actual process of applying from Europe or South America is a logistical nightmare.
Oh, the logistics can be a nightmare if not handled right.
Exactly. And their marketing clearly recognizes this because they heavily emphasize a 100% digital client-first experience.
They do push the tech angle quite a bit.
They do. They highlight fast tech tools integrated directly into their site, like complex mortgage calculators that break down principal, interest, taxes, HOA fees. They even have a tool offering instant home valuations in 60 seconds.
Which is super convenient.
It is. You can upload documents and track your progress securely from literally anywhere in the world.
The whole pitch is built around removing geographical barriers through technology.
And the tech sounds fantastic. But here is the paradox I found. When you read through their glowing reviews, and they maintain a perfect 5.0 rating across 46 reviews.
Which is very hard to do in the mortgage industry.
Right. But clients are not geeking out over the software. Nobody is saying, wow, that secure document portal changed my life.
No, they aren't.
They're overwhelmingly praising the human being who kept them from having a panic attack.
That's such a great observation. The marketing leads with digital efficiency, but the testimonials lead with human empathy.
Absolutely.
Yeah.
I mean, look at the review from Joanne Dave. She wrote that she had several questions and was terrified she wouldn't be able to close on time and would lose her deposit.
That is a terrifying thought for any buyer.
Right. And she didn't thank the algorithm. She noted that Kevin listened to her concerns, guided her, and made her feel calm and less nervous so they could secure an easy approval.
Yeah, that human touch is vital.
Then there's Rudy Perez, who praised how responsive and stress-free the process was, emphasizing that Kevin took the time to explain every single step clearly. Another reviewer, Andrew, simply wrote, "Exceptional service, always one call or email away." People are explicitly highlighting the communication.
Well, if we look at why this hybrid model combining top-tier tech with high-touch human support is so crucial, we have to acknowledge the inherent nature of the transaction.
Yeah, real estate is stressful.
It's incredibly stressful. For most people, it is the largest financial transaction of their entire lives.
And then you add the complexity of doing it from another time zone or trying to prove your income as a freelancer.
Yeah.
The anxiety must be totally off the charts.
The technology exists to handle the friction. That's its job. It manages the secure transfer of sensitive financial documents across international borders. It provides the immediate status tracking. But by letting the software automate all that logistical busywork, it actually frees up the human broker to do the emotional and strategic heavy lifting.
Right, because technology cannot replace customized guidance.
Exactly. When a borrower is navigating a complex alternative loan, an algorithm cannot sense that they are panicking about losing a massive deposit.
It just can't.
And an algorithm definitely cannot look at a unique freelance business structure and strategize the most compelling way to present 12 months of bank statements to a human underwriter.
You can actually see that emphasis on stress reduction woven right into their website's FAQ section, too.
Oh, yeah.
Yeah. They aren't just listing dry textbook definitions. They tackle the anxiety directly. For instance, the sheer terror a lot of first-time or non-traditional buyers have regarding the down payment.
Ah, the famous 20% myth.
Exactly. There's this age-old myth that you absolutely must have 20% in cash to buy a house, which keeps so many people sitting on the sidelines.
So how do they break that down for the user?
They explain that with FHA loans, you can actually get approved for as little as 3.5% down.
That's a huge relief for a lot of people.
It is. And they don't just stop there. They explain how private mortgage insurance, or PMI, factors into that. I've always thought of PMI as just this annoying extra fee the bank tax on.
A lot of people see it that way.
Right, but they reframe it to explain that it's actually an insurance policy that protects the lender, which is the exact mechanism that allows the buyer to get into the house with less cash upfront. It completely demystifies the cost.
That's a very transparent way to handle it.
They also tackle the confusion between pre-qualification and pre-approval, explaining that pre-qualification is basically a casual estimate, while a pre-approval is a much stronger conditional commitment that gives you actual buying power.
Which is a very important distinction to make before you start putting in offers.
Yeah.
And, they also address what is arguably the biggest fear any homeowner has.
Which is,
what do I do if I can't afford my mortgage payment anymore?
I'm really glad you brought that up, because they do not hide from the worst-case scenario. Their immediate advice in the FAQ is to reach out to your lender the moment you realize you might struggle.
Right, don't wait until you've missed 3 payments.
Exactly. They explain that an experienced mortgage advisor can help explore options to restructure the loan or refinance so the buyer can keep up with payments and stay in their home. It is entirely framed around keeping the client secure rather than punishing them.
It reinforces that whole client-first aspect of their brand architecture.
It really does.
The digital tools get the borrower in the door quickly and securely, but the human expertise and empathy are what actually guide them across the closing line.
Yeah.
The founder's background living abroad clearly informed this approach. He understood that international or non-traditional buyers don't just need capital. They need an advisor who actually understands the unique anxieties of their specific process.
So what does this all mean for you, the listener? Let's tie all of this together for your own understanding of the modern real estate market.
It's a lot to take in.
It is, but the takeaways are clear. Mortgage Today has carved out a highly unique position by taking a genuine pain point, the structural rigidity of traditional U.S. banks, and turning it into a borderless lending philosophy.
They found a real gap in the market.
They absolutely did.
Mm-hmm.
By operating as an independent brokerage, they utilize the power of 40-plus wholesale lenders to find the right mathematical fit for the borrower.
They use those different doors.
Right. They leverage specialized alternative underwriting, using DSCR to evaluate rental properties based on their own revenue, and utilizing ITN solutions to help foreign nationals build a footprint without relying on outdated U.S. credit scores.
It's very forward-thinking.
And perhaps most importantly, they've recognized that a 100% digital application process is actually most effective when it serves to free up the broker. It allows for that high-touch, empathetic human support that non-traditional borrowers desperately require.
It is a fascinating blueprint for the future of finance, and it really makes you wonder about the long game here.
What do you mean?
Well, as remote work, digital nomadism, and global living become the standard way of life rather than just a niche exception.
Which is definitely happening.
Yeah, exactly. Will the traditional megabanks eventually be forced to completely overhaul their outdated assembly lines and adopt this borderless mindset just to survive? Or will agile, specialized brokerages like Mortgage Today simply inherit the future of modern real estate investing?
Oh, man. That is a great question to mull over. Because the modern workforce has already evolved, and the financial institutions are going to have to catch up one way or another.
They can't stay rigid forever.
They really can't. Well, thank you so much for spending part of your day with us on this deep dive. We hope you walk away feeling a bit more informed about how the lending landscape is shifting, and we really look forward to exploring our next stack of sources with you soon.